Welcome to the Market Rundown. I'm Matt Bennett with the channel, and I'm here to talk about the August WASDE report, the supply and demand and crop production. And so I've got three big takeaways, and they basically center around the corn market. So we're going to talk about what the yield was and what carryout levels look like, and then how a producer should look at it. So I just want to start out by saying, as far as the report was concerned for soybeans, there really wasn't a lot of change, and that's why we want to talk mostly about corn today. The expectations for soybean yield was to be 50.8 with a 50.4 is what the USDA came out with. This is a survey-based approach, and they use thermal imaging for this report, but the USDA is not out in the field for either corn or soybeans, and that's important to note. Whenever you look at how that impacted carryout levels for soybeans, I mean, essentially new crop carryout, which is the crop we're about to harvest, it came in at 155, which is exactly what the trade expected. There were some minor revisions on old crop. You look at the corn report, though, and 174.6 is what the yield came in at, which is quite shocking, to be totally honest. The trade was expecting almost a 178 yield. USDA had called trendline yield 179.5. And so obviously 174.6 was significantly below most expectations. And yes, we've had a lot of issues this year, especially in the Northwestern Corn Belt with dryness. There's been some serious production issues that producers have been concerned with, and for good reason. But a lot of folks felt like the Eastern Corn Belt might be able to drag that up a little bit. Whenever you throw that together into the balance sheet, essentially the USDA came out with a 124 carryout as far as new crop carryout stocks are concerned. And so old crop was minorly revised, nothing major there, but new crop at 124 was about 200 million bushels below the average trade guess. And so that was actually, with them dropping demand a little bit, they had to drop demand a little, because the presumption, of course, is that price is going to be strong enough that you're going to temper demand somewhat. And so a 124 carryout is where we're starting. Now, I would say that, as a producer, want to look at this. The third thing I was wanting to talk about is, first of all, I think with some of the crop conditions improving throughout the month of August so far, the first two, we've seen improvements. I'll tell you what, we need to be careful as to assume that this yield will not grow. And so whereas last year the yield went down from August, I think this year there's a decent chance that we could see the yield grow from this August report. And so producers can take this opportunity of these great markets and a nice rally that we saw here today, and be able to use them in their benefit as far as their marketing plan is concerned. So again, my three takeaways for the market rundown today would be, that the corn yield was shockingly low, which made the carryout fairly low. And this third thing is that it's going to provide a lot of opportunities for producers. Again, this is Matt Bennett. Thanks for tuning in to the Market Rundown. If you have any questions about the three takeaways we went over today, feel free to leave them in the comments section or respond to the newsletter, which, if you don't have the newsletter, you can go to channel.com to sign up for it under the marketing tab. Thanks for joining us.